All right, today we're going to start off looking at the whole market heat map. As you can see, this is a very interesting day. We had earnings from Microsoft, Google, and Meta, and they were terrible. And you'll see Microsoft was talking about a slowdown in their cloud sales, and that actually had a knock-on effect to Amazon. Microsoft down 7.7% today, Google down 9.6%, and Meta reported after hours. We'll take a look at the chart of that here in a moment, but after hours it's down like 20%. So terrible earnings in advertising, cloud starting to struggle. Tomorrow is an important day. Tomorrow we have Apple earnings and Amazon earnings. And since Apple and Amazon are large chunks of the S&P 500, let's just switch to the S&P 500 view of this. Apple and Amazon have an outsized weight in the market. And so, today it looked like we did have some rotation out of technology and into healthcare and energy. Uh, Also, I guess, financial services. Tomorrow is going to be an important day. There's only so much that all these little boxes can do to hold up the market as a whole. And if you have Amazon and Apple acting anything like Google or Microsoft, never mind Meta, then we're probably going to see the market head down. So this is a look at the market. We see today we had a shooting star style. Ideally it would have started the day up higher and came up and down a little further to be a perfect shooting star. But what we see here is that it looks like we have an opportunity to either roll down, right? And so if Apple and Amazon's earnings are bad, we very well might see that this is a midterm rollover of the market, and it very well might behave much like we saw in this bear market rally over here, where we rallied off the bottom here a good 9%. And, we're over here, we have likewise, let's do that. We've rallied, good 9%. And that's kind of the behavior of the market recently in these bear market rallies. Or we can pick another one, about 9%. So tomorrow's, I can't stress enough, critical day. And we'll find out, if maybe we can have a market where we have good Apple earnings, good Amazon earnings. Perhaps we can kind of wiggle our way up towards the 200-day moving average. That's another thing to keep track of, is the 200-day moving average. We have been hitting our head off of it recently, so I do expect the market to definitely, if it gets close to the 200-day moving average, that's going to be a key level to pay attention to. Now looking at the NASDAQ, we see that we're also at a critical level here. The earnings tomorrow are very important. We're running back into what previously was support, and so that could become our future resistance. It all really depends on what happens tomorrow. Again, we could cycle through and go up towards our longer term trend, or this might be a scenario like we saw in early June, where we get some bad news stacked up and we start heading down. One of the things the market's also waiting for is next week's Fed release. So we're 6 days away, 17 hours and 4 minutes. The market is pricing in a 75 basis point move. The thing is, the Fed is getting the same news we are. They, are seeing the market drop, and frankly, I think the Fed at this point wants to see the bubble, the bubble be eased, right? They want to see the bubble, the money come out of the bubble. I don't think the Fed's interested in having the stock market go off to the races if they do, let's say, a 50-point basis move instead of a 75 basis point move. They're not interested in that at all. And so even if they do a 50% basis move either this meeting or next, there's probably going to be some forward-looking statements or something to temper that, so that the market doesn't get too excited by it. So one of the things I wanted to take a quick look at here also was the world markets. You'll see that China was absolutely almost 100% green, and by a large margin. You have Alibaba up 8%. That in part was, I think, some of the things that were counterbalancing the moves down by the big tech names. And it always strikes me as being a little choreographed. That when you have a day where the big names go down a lot, you just have a happy coincidence where you have a lot of offsets. And is that rotation? That could be rotation. But the problem is this is earnings. Earnings aren't looking great across the board, and so I think they're taking down the big names, and you're going to see the little names kind of get knocked out one by one here over the rest of earnings season. Tesla is following the rules that we highlighted in a shorts video earlier in the week. It has the MACD rolling up. We were oversold on the RSI. That's coming out of that. We do have the first day here yesterday without a Williams crash detector bar on, and we do have some Heikinashi green candles here. So again, tomorrow's an important day. So honestly, I wouldn't be taking any large positions or doing anything new until we figure out which way the market's going to go after tomorrow's earnings. With Google, just not a healthy move. Market's just not happy with their earnings. Let's talk Meta. Wall Street is not liking the VR obsession, 20% since yesterday, and that's a huge move. Meta is not a tiny stock; it is one of the big boxes on S&P 500. Yesterday, Microsoft released earnings, and they were showing a slowdown in their cloud growth. It has come down quite a bit over the last day. We're looking at a move of -8%, and this actually had a knock-on effect on Amazon. So Amazon is going to release earnings tomorrow, and so this is one to keep an eye on. Likewise, Apple releases earnings tomorrow. If we have good earnings, I expect us to bounce into the 200-day moving average. If the earnings are bad, some levels of support are down here at 136. So we'll see what happens. One of the things I'm paying attention to here is also the US dollar. It's come down quite a bit the last few days, along with treasuries kind of turning around. So we are in a range, though, where the dollar is temporarily looking a little oversold. If it does come up, that tends to be a weight on the market, not helpful. So dollar came down, market went up. The inverse is true. So keep an eye on the dollar